The S&P 500 finally broke the winning streak after 9 consecutive up weeks, and here has started the new month with an inside bearish candle. The Nasdaq 100 was down 3% last week, and the Dow Jones Industrial is still hanging around near its all-time high. While the Russell 2000 did a fake out, the VIX did not even fudge. And the 10-year yield is back above 4%, so what happened to the anticipated 6th rate cut for 2024? We'll talk about all these things in this video, so stay tuned. Welcome to another weekly S&P 500 and financial market analysis. The market finally had a negative week, and the Russell 2000 went from top performer to the worst performer. It was down 3.75% for the week, while the Nasdaq 100 was down 3% for the week, and the S&P 500 was down 1.5%. The Dow Jones Industrial and the New York Stock Exchange Composite were the best performer for last week. They were only down about 0.5%. And looking at the sentiment chart here, we see the VIX is still down at the low teen level, sitting at somewhere around 13.35 on Friday. But the put-call ratio is back in this head zone between 0.75 and 1. So market participants are being cautious. And except for Friday, the market was under selling pressure. The broad market participation was on the downside on Wednesday. Maybe the FOMC minute caused the market to scale back its enthusiasm on the number of rate cut in 2024, but who knows? And we also see the number of stocks making new 52-week high continue to come down. But the good thing is the number of stocks made 52-week low was also low. And we did not see any negative divergence or positive divergence between the cumulative AD line and the S&P 500 last week. And the Nasdaq was under selling pressure for the entire week, even on Friday, where the index finished a little bit positive, but the up-down volume ratio was at minus 1.27, and there were 578 more declining stocks than advancing stocks. We also saw the new high, new low reverted back to negative, and more stock making new low than new high once again. And interestingly, there is a small positive divergence between the AD line and the Nasdaq 100. So could a bounce be coming in the coming week? Or will there be increase in market participation on the downside to lower this AD line? Now let's take a look at the 11th sector in the S&P 500. The technology sector is underperformed. You can see there's underperformance here. And the healthcare is showing outperformance, while the consumer discretionary is still underperformed. And the financial is also showing outperformance. Communication seems to starting to show underperformance here, and the industrial showing some underperformance last week. The consumer stable is underperformed, although we did see a little bit of outperformance last week, and the energy is underperformed. And also the real estate is showing a bit of outperformance here, or it could be a little bit of a flatlining here. And the material is underperformed. And also the utility is showing a little bit of an outperformance recently. You see this little uptick here from last week. And looking at some other sector here, we notice that the semiconductor is sort of underperformed right now. It's been outperformed, but right now it seems to be underperformed recently. And the oil sector seems to be showing a little bit of an outperformance in the last week, but overall the trend is still underperformed. Likewise for the oil exploration. Now the retailer is showing some underperformance from last week after a little bit of an outperformance over here in the previous week or previous month. And the biotech has been showing some outperformance here. And the miners also showing some underperformance recently in the last week or so after some outperformance in the last couple months. Now we are seeing the banking sector and also the regional banks seems to be holding up here, although it is showing a little bit of a leveling off on the performance here. But recently, it's been outperforming the S&P 500. So is the home builder. We see the home builders turning down now, so it could be showing some sign of starting to underperform the S&P 500 and also the long-term bond after a little bit of a rally here in the couple weeks ago. We are seeing some underperformance here in the last couple of weeks. And looking at this yield curve between the 10 and the 2 years, continue to move up, but it's still inverted. It's sitting at minus 0.33 here. And the 10-year versus 3-month is also moving up a little bit, sitting at minus 1.33, but it's still inverted. So looking at the 10-year yield index here, we could see that the 10-year yield is back up above the 4% and sitting at 4.043. Now, we could see it move up to this 4.333. So depending on what we're going to see on the CPI this week, if the CPI come out hot, we could see the yield come back up toward this 4.33 level. Also, we saw the dollar continue to bounce off this 100.8 level here. So we're going to keep an eye on to see would it be able to come up to this level here, 103.82. And looking at the dollar future here, we see that it is trying to move up to this low volume dent here and into this high volume zone. So if it could come up to this low volume dent, then we'd be watching this composite point of control somewhere around this 104 level for the dollar futures. And for crude oil is still trying to get back up above this composite point of control near this 75.69. So we're going to be watching this price between these two high volume nodes here, this composite point of control 75.69 and also this level down here near the 72 area, and see how it will react. So if it could get above this composite point of control, then we could see oil possibly work itself back up to this level up here near the 84 or close to the 85 level. And for silver, we still looking at silver here, struggling to try to get back above this composite point of control near the 24 level. So we'll be continue to watch these two extreme level between 2670 and 2155. So depending where it's going to move, if it could get above this composite point of control, then we look for the price to auction up toward this 2670 area. But if it continue to remain below this composite point of control, we could see silver possibly come back down and retest this level here at 2155. Gold is also struggling, try to break out from this balance area. So we're still watching gold to see would it be able to move away from this balance area and into this area here up at the 2300 level. But this 1944 will remain to be a near-term support if gold continue to pull back. Now let's take a look at the index, starting with the NASDAQ 100. NASDAQ 100, remember last week we were alerted by this Greystone Doji to be prepared for a pullback, and we saw a pullback last week. So we'll be monitoring the pivot high near this 15,932, this level here, to see would it be able to find support here. And for the Russell 2000, this bearish inverted hammer candle told us to watch for a potential near-term pullback as well, and watch out for pulling back into this balance area that it could set up a look above and fail type of move, and we could see price possibly work itself back down to this 1640 level. So we'll be watching first this 1925 to see would it be able to find support here. And if it's not, then we'll be looking at this mid here somewhere around 1830. And for the Dow Jones Transportation, we're watching this inside candle, and we're saying watch for the direction of the break from this inside candle. If it broke out of the high of this, hangman type of doji, then we'll be looking for the Dow Jones Transportation to possibly move up toward this 16,730 level. Or if break below the low, then we'd be looking for the price to come down and possibly get into this area here near 15,000. So we see last week it broke below the low. So we're going to keep an eye on the Dow Jones Transportation to see what it move down here and find some kind of support here near the 15,000 level. And for the Dow Jones Industrial, we saw a very small pullback from the Dow Jones Industrial last week. It only down about 0.5% last week. So we're going to still be watching for a pullback, at least coming down, come down to test this all-time high near the 37,000 level. Then if we see it break below this all-time high, then we probably could see a little bit more of a substantial pullback and possibly come down to this 35,800 area or the 36,000 area. And for the New York Stock Exchange Composite Index, it was unable to get back above the 17,000 area. So we're going to be watching it to see would it come down and be able to find support near this 16,416. Now, like I said earlier, the S&P 500 winning streak came to an end after 9 consecutive up weeks, and we are watching for a possible pullback to this 4,600 area then maybe if we could find support here, then a resumption of moving back up and test this all-time high and possibly move up toward the 4,900 level. So from last week's, the market was pricing in a little bit of a pullback, and we saw this pullback toward this 4,700 level that we're kind of keeping an eye out on. And for this coming week, the market is pricing in a pullback to this 46.37, this blue zone that we have here. And the lower range is between 4640.60 and 4625. And the upper range is between 4767.50 and 4753.90. So we're going to monitor for a possible bounce if the price come down to this lower range here. And that would represent somewhere around this 4% type of a pullback from the high here, the year-end high. Now, if you'd like to see more detailed analysis on the S&P 500, I would suggest that you head over to my newsletter at Substack and read this post, A New Year, A New Beginning. The link is smtraderca.substack.com. Now, let's take a look at the E-mini S&P 500 future, the ES. We saw a continuation of this one-time framing down, and we saw some of the poor structure from December. Now, we see there are still a lot of poor structure from December that is waiting to get resolved. And from this composite volume profile, we are watching to see if it will break from this double distribution up here and move down to this thinly formed distribution below here, below this double distribution. So once again, if you're interested in more detailed analysis on the ES, head over to my newsletter, Substack, and read this post, A New Year, A New Beginning. The link is smtraderca.substack.com. So in summary, we are looking at some profit-taking type of a pullback at the present. It could turn out to be more than that, but only time will tell. At the present, we are not seeing panic selling. And the VIX is still in the low teen level, and the put-call ratio is not in the risk-off area. A 3 to 5% pullback is typical and should not be unexpected after a huge run-up from the last 2 months of 2023. For now, exercise caution and wait for the market to settle down before we set a near-term direction. After all, the S&P 500 future informed us there is a higher high waiting. Now, I will put out a separate video on the index ETF later. So in the meantime, go check out my newsletter at Substack and be sure to smash the thumbs up and subscribe to this channel. Thank you for watching and good luck.